Welcome to the State of the Markets podcast. I'm Paul Rodriguez of ThinkTrading.com.
I'm Tim Price of PriceValuePartners.com.
And our very special, returning, regular guest is Dominic Frisby. Dominic, are you in the house?
I am in the house. Good morning.
Good morning. Tim's on the line too.
Morning, Tim.
Guten Morgen, wie geht's?
Es geht gut in the house.
Ausgezeichnet.
Was ist ausgezeichnet?
Excellent.
Okay.
Dominic Frisby, welcome back to the show.
Thank you very much, Paul and Tim. Lovely to be here.
Oh, it's absolutely great to have you back. It's really exciting. I think we always or usually have you on a January so we can look at the year ahead. And,
oh, yeah.
And it's particularly exciting this year because you've completed a fantastic book that we want to talk about, all about gold, which is very topical. But let's start off with what you're looking at for the year ahead. What do you think the big trends are going to be?
Well, I sort of have a little competition with myself on my website, on the Flying Frisbee, in my newsletter, I should say, when I do these annual predictions, because because I want to do well in my own little competition, I tend to not make my predictions too outrageous. But at the same time, obviously, you want to make them entertaining, so they have to be a little bit outrageous. But my first prediction was, well, my first two predictions were that gold breaks 5,000 and that silver breaks 100. And we're only, 3 weeks into the year, and I think we're already there, pretty much.
Brilliant. So looking back from last year, what did you get right? Do you remember what perhaps didn't go so well?
Well, we can talk about last year's in a sec if you like. Do you want to run through some of the others for this year?
Oh,
As
definitely.
well?
Yes, please.
There was a lot more to them than gold and silver.
Yeah, I was hoping, but I wasn't sure how many you were going to share. But no, that'd be fantastic.
Well, yeah, no, I'm just starting with those two, because it's happened so quickly already.
Yeah, no, fantastic.
Well, it's happened literally overnight, to be fair.
Yeah, I mean, it's just, it's crazy what's going on with silver and gold. And, I think gold has to go a lot higher. And this bull market feels that there's something going on beneath it that is bigger than the one in 2000 in the noughties. And it started with gold. And then in the last kind of 9 months or so, it's moved into silver and the miners. And silver and the miners is what retail buys, whereas physical gold is, originally that bull market was driven by central bank buying after the Russian the US confiscation or freezing of Russian assets after the Ukraine invasion.
Do you think that freezing of assets will go down in history as one of the most outrageous self-inflicted disasters in economic history? Because I do.
Well, yes and no. And because it's really common in war. The first thing you go for is the other person's money. It's every war in history they've done it. You're not often told it in the storybooks, but for example, the Nazis would go straight away and confiscate gold, and they issued loads of fake pound notes.
They never entered circulation, though, did they?
They did in Europe, but not in the UK.
Yeah.
And then, in the American Civil War and in the American War of Independence, there was all sorts of, fraudulent notes were issued. You try and destabilize the country that you're at war with. And so it's very common to do this. And it's sort of, it's easier than sending in the planes and sending in the bombers. So
I would say that in which case all you need to do is just get the country you're fighting to set up its own central bank. Wait.
Yeah, but so I see why they did it, but interestingly, there's a sort of parallel with the kidnapping of Maduro in Venezuela. Is that they froze all Venezuela's and Maduro's tether assets, and the oil companies were buying and trading their oil. They were still, in other words, it's interesting. They were still using the US dollar, which is interesting, albeit through Tether. But they froze all their stablecoin assets. So that tells you that Tether is not independent and will do whatever the US government tells it to do. But so, at a crypto level, exactly the same thing happened in Venezuela. So it's a common practice, but in terms of the weakening of the position of the US dollar, yeah, it was an error. But actually, because of this thing of Triffin's dilemma, and the US dollar, the US actually being prepared to sacrifice a little bit of its reserve currency status in order to get some industry back on shore. Maybe it wasn't such a total disaster, but for sure it weakened the dollar's position as the global go-to reserve asset for
I mean,
sure.
I guess where I'm coming from with it, given that I have a history in the bond market as the first part of my career, the death blow was really to the credibility of the U.S. Treasury market. So we know that, as you've already alluded, that from the moment of the sanctions onward, central banks accelerated not just their purchase of gold, but also their disinvestments in U.S.
Yeah.
Treasuries.
Yeah, that's very true. And although China, which has been the biggest buyer of gold, has been reducing its treasury holdings since 2014.
So these
And
aren't new developments, but they're just accelerating.
it's definitely exciting, but it's done it by sort of boiling frogs syndrome. It just shaves a little bit off, but it hasn't reduced its US dollar holdings, only its treasury holdings.
Is that a popular dish in China? Boiled frog. I would imagine it probably is. Szechuan cooking certainly.
Boiled chicken foot.
So your other predictions for
Well, in terms of the stock market, I think the S&P will follow the typical pattern of a second year in office, which is that it starts off reasonably well, but quarters 2 and 3 are bad. Range trading declines, and then you have a very strong final quarter. And I'm just sort of, and you go back and you look at the second year of a presidential cycle, and it always seems to go that way. And so I see it going that way. Bitcoin has been very weak, and a lot of Bitcoiners are really frustrated because suddenly silver's got all the limelight. But I think this could be a good year for Bitcoin, and so I predicted 150,000. Political prediction, I said Starmer survives,
Yeah.
although this Chagos fiasco looks like, how can he not known about this 1966 agreement? It's just insane. He's just supposed to be a lawyer. I also think this is a good year for oil. I think despite the British political situation, it's a very good year for British stocks just because they're so cheap. And I think there are lots of parallels between Japan in 2015, say 2014, 2015, 2016, and how cheap Japan was and Britain now. And there's lots of opportunities. I think beer, bizarrely, could be beer and pubs I think could be a good buy, because it's like, how much worse can this sector get? And it's trading below where it was in COVID.
You mentioned you mentioned Japan. Do you have any concerns about the implications of rising JGB yields?
Yes, I do. I have a lot, and that's really kicked off this week with the announcement by the Prime Minister that she's going to have an election next month to try and win a stronger mandate, and she's standing on a stimulus ticket. So the situation in Japanese bonds, it's like the time bomb that's been waiting to go off since forever, and it just never quite goes off. And there were sort of signs that it might be starting to go off at the beginning of the week, and they seem to have gone away again. But we'll see. I mean, it's going to blow up at some point, and then everyone's going to go, "Well, I told you." But it was like, how many widows has this trade made before it comes right?
when you say the UK is cheaper or cheap relatively, how do you actually value it?
Well, just like you could take a typical UK stock and then look at the same, company that does the same thing in America, and it'll be trading at 4 times the market cap. And there are just some very cheap companies. And I've been to quite a few presentations by American investors, American fund managers and so on. And they're all saying just how cheap the UK is. And there's, a lot of foreign money circling, waiting to buy. And there's already been quite a few takeovers in the last 12 months. It's a process that's starting to happen.
The problem for that thesis, though, is that, not that I advocate this, but I'm just simply reacting to reality, is that because we don't feature in the indices, that there won't be a passive bid to the UK the same way there is one for the US. 'Cause it's so huge in the indices.
Well, fair enough.
No, I'm just playing devil's advocate. I
I mean,
agree that the
it's a
market's
fair enough
cheap.
argument. You don't get there's the passive money doesn't come in, and that's one of the reasons for the cheap valuations. I agree.
But I think there's a misnomer about the UK as well, because a London-listed company, especially in the FTSE 100, operates globally anyway. So it's a global index that happens to be a London one.
Yeah, I mean, I would say 250 stocks and below rather than 100 stocks, if that makes sense.
So I remember your Starmer call.
My final big thing,
sorry.
by the way, is just good and a good year for all the critical minerals, all those strategic metals.
Right. So basically, copper, zinc, aluminium.
Yeah, and all those really niche ones that I watched a presentation earlier in the week by a company, a floor spar company. I bet you've never even heard of floor spar.
No, what is that?
I'm not even entirely sure. It's something to do with steel, but it's essential. And there's only one mine in North America, and blah blah blah.
To your point, we had I think we've had Jeremy McEwen on. Do you recognize the name?
I do. He's got his own pod. Nice man.
And I saw him on on LinkedIn. I think earlier today, and he said, "Just thought I'd post my 2026 investing watch list." And then there's a copy of the periodic table of the elements.
Very good. Can you name some? Can you name some of the metals that this company presentation was looking at?
Fluorspar was the main one.
Right.
There were a couple of others in there. A couple of rare earth ones that with some unpronounceable thing.
Oh right. Okay. Sorry.
Things like antimony.
Right.
Is
tellurium.
Which one? Beryllium, did you say?
Tellurium.
Tellurium, yeah.
Tellurium.
Well, I mean, beryllium must be another one.
Bismuth.
I remember there was a big beryllium story about 15 years ago, and beryllium's like a very light, brittle metal, but it gets used in aircraft and bicycles and things like that.
Have you heard Tom Lehrer's song about the periodic
I was
table? It's fantastic.
Yeah.
The entire periodic table set to music.
Yeah, one of the greats.
So going back to your look ahead from last year or around last year, I remember you saying about you thought Starmer would survive, and I thought, no way. There's just no way. And it was as the year went on and as the political pressure mounted, I just thought he can't stay. But that was a phenomenal call, actually, to say that he was going to. What made you think that, and what do you think politically the outlook is for this year?
Well, it was simply that we've sort of become normalized to changing prime ministers because of everything that happened with the Tories. But actually what happened with the Tories and the ever-shifting prime ministers is not normal. It's also less likely, given the historical record, it's less likely under a Labour government. And also, it was so early in the electoral cycle that I figured, all those who might want the gig, whether it's Andy Burnham or Wes Streeting or Angela Rayner or whoever the potential person that might replace him is, it's just like there's still too big a gap between now and the next election. And so the MPs who are scared they're going to lose their seats and therefore want a different leader, it was just too early for them to swoop. There's too much time between now and excuse me, I've got hiccups, between now and the next election. And I sort of feel similarly now. And, it's very rare for a prime minister doesn't willingly resign. And even if, from our little seat in wherever we are in the world, we can see that they're toast. From their seat in Downing Street, they still think, I can turn this one around. I can turn this one around. And so, it's a combination of the ambitions of the backbenchers, the distance to the election, the previous track record, all these things. And so I think he probably just hangs on another year. But I looked at the betting odds and it's 50-50. So that's kind of where I am.
Do you have a little flutter then? Did you have a little flutter on him last year?
No, I didn't. But
No.
I do sometimes bet on, I remember I put a huge bet that Steve Baker was going to be the next leader of the Conservative Party, and that didn't work out.
Well, we can't win them all.
Yeah, I just thought it was inevitable because he was so organised and he was the sort of principled right winger and all of this. But I know I got that one wrong. But I had very good odds. It was like 70-1 odds or something.
Oh right, yeah.
I don't know if the political betting firms offer this, but I would, if somebody was putting a price on Starmer being the first prime minister to be prosecuted for treason, I'd have a small flutter on that.
Yeah, I remember that was going to happen to Boris, wasn't it? But it never quite did.
So,
I just think we're in a world now in which literally anything is possible. The Overton window of possible outcomes is now infinitely wide.
Yeah, I mean, you know, I, our political system, it's just the entire system is designed for a different age, and it's not appropriate for the circumstances that we're in, and it can't change. It
yeah.
literally can't change because the citizen isn't armed. You can't just sort of throw it away, and it can't change. Voting doesn't help. I just I my the only solution, the only answer to British politics solution is for the currency to collapse. That's the only thing that I can see.
But I don't think of this as a uniquely British problem. I think this is a Western problem writ large, which is people are waking up across the West to the fact that there is no real political choice. There is just a uniparty.
I agree.
So I would make a case for actually both, and this is wishful thinking clearly on my part, but I'd make a case for both Labour and the Conservatives becoming electorally extinct within the next few years.
Well, I think the Tories already are, and Labour could well be. But you've got to say, reform. The latest polls that show reform 25 to 30%, they should be on 40%.
I think the fact that they've become a sort of a retirement home for failed Tories isn't helping their cause anymore.
I know. And you've got to feel sorry for all those guys that have, been in there behind the scenes since the word go, loyal, and suddenly these newcomers get all the prime gigs. Hello.
Hello. Yeah, sorry. Thought Tim was going to carry on with the political angle, but so were there any other calls that went particularly well from last year, or ones that didn't quite pan out in the way you expected?
I shall tell you. What often happens is the worse I do in the predictions, the better my portfolio performs.
Because you had the what was it? The lovely Italian phrase for your portfolio.
Oh yeah, the dolce far niente, which means the sweetness of doing nothing.
Yes,
And I've designed this dolce far niente portfolio, which is basically, gold, Bitcoin, equity indices, energy, and a few other things. But it's designed to reflect the situation in which the world now finds itself.
Yeah.
And modern economic circumstances, and it's designed that you don't have to keep fiddling with it. We did one reallocation about 2 years ago, and apart from that, it's just stayed exactly the same.
Well, time goes so fast, doesn't it? So if you set up a portfolio like that, before you know it, 2 or 3 years has gone by, and who's going to be really fiddling with their portfolio all the time unless they're really active? And it's what you change. So it's a very smart idea. So would you give us the constituents of that again, or would you?
I can do.
Yeah.
I have to say it off the top of my head, but we have a big weighting to. We just bought one of those ETFs that tracks global stock markets, but they tend to be very heavily weighted to the US, more than 60%. I have to say, I worry about this issue of 40% of 40 US stocks being responsible for 70% of gains, or whatever the statistic is. There's too much concentration at the top, so I do worry about that in US indices, because it's already starting to happen. In fact, you just need some of those big companies to be flat or correct a little bit, and the US indices underperform, and as a result, the global indices underperform because the global trackers are all overweighted to the US. But in any case, we've just bought a global tracker fund, and I can't remember, that's like 40% of the portfolio, something like that. And this is a starting point, because I say 5% Bitcoin, 15% gold. There's another where we were at 5% uranium, and we reduced a couple of years ago to 2.5%. I need to get the uranium back, because that's obviously going to be one of the critical. It's already happening. It's having a very good year. And we had a little bit to wealth preservation, the Ruffers and those kind of things, but they've just been so boring that I just don't. And we've got gold. I don't see the point. And that was kind of it. And then obviously 10% special situations, and that's all the sort of things like your floor spa company and those kind of speculative plays. But we try and keep that to less than 10% of the portfolio because otherwise, if you do a speculative play, it goes wrong, you can get really hurt.
I was thinking that the...
By the way, my own portfolio is way overweight speculative plays, but that's just because I'm stupid.
Well, if it works. I was musing that the AI narrative at some stage would help the smaller companies in America, and because it was all AI companies that were effectively the shovels and the picks in the gold boom, but then it should trickle down to smaller companies because there will be benefits that they can have. No, I didn't really find any bulls of smaller companies apart from Dave Hunter in the US, but technically the charts always looked like it was getting ready to break out. It has actually broken out now. So I think there may be this trickle down that the big companies are so expensive now, perhaps investors are looking elsewhere for cheaper things, which is interesting as it ties into your comment about the UK being relatively cheap. Perhaps it's going to help the relatively cheaper US stocks break out. I just wonder whether you actually look at smaller US stocks, and if you did, what you might think of them.
Well, I mean, I've got a couple of individual picks that are very small US stocks.
Oh, really?
In fact, my third biggest position is got a market cap of maybe $100 million. But unfortunately, for about 2 or 3 years, I've been saying, buy small caps, don't buy the big caps. Because, historically small caps outperform, but they just haven't recently. And I just thought their time must finally have come. So I think I was maybe a year or two too early to that. But over the last year, I agree, we're just starting to see small caps underperform. And by investing in small caps, you reduce, even if you just buy the Russell or something, you reduce your exposure to this problem of excess concentration at the top of the S&P.
I remember you were getting slightly frustrated with the miners not moving. Obviously, that's not no longer
changed.
That's changed a lot. But did you manage to stay with it, or did you?
Yeah. I've got plenty of exposure to miners, but there's one guy who I'm on a chat with in an investment chat group on WhatsApp, and he put 95% of his entire investment portfolio.
Is that Tim Price?
Into a silver miner called Highcroft.
Oh, wow.
He was so convinced about it. And it's, Eric Sprott's been buying it like mad, and it's just been a complete winner. And, he's made so much money. But that kind of, I didn't go to that kind of level of belief in the silver bull market. 95% of his entire portfolio in one company.
That's because
he was so convinced the story wasn't properly told, and he's been proved right.
Well,
don't try this at home, kids.
Well, to be fair, Tim, you've had a conviction on this, haven't you? And so this has been kind of your call for some time. And I'm not saying that it's necessarily completely concentrated, but it has been, targeted to exactly what we're seeing now. This is panning out exactly as you've been saying for quite some time.
If I could just add, Tim, just come in very quickly before you go. A couple of years ago, I remember moaning to you about gold miners.
Yeah,
and you were just going that it will happen, it will happen. You were being very patient, and so I was just going to, give you credit for being patient.
Well, it's very kind. Sorry to mention Dispatch is someone we mention a lot, which is Peter Cundall, the late Peter Cundall, Canadian value manager, who said the requirement for successful value investing is patience, and more patience. And then he said, in capital letters, the majority of investors do not possess this characteristic, which is the reason why there are so few long-term value investors, because no one can cope with the grinding years when nothing happens.
Well, exactly, and that's absolutely right. But the problem is patience when you're wrong. Patience when you're right is a good thing.
Patience when you're trying to retain clients as well. So it's patience when you're trying to retain clients' goodwill as well. So it's not just being in control of your own emotions, but trying to manage other people's as well.
And I just think the internet age, mobile phones and all the rest of it, they don't inspire patience.
But for those people who may be unaware, there's a mention of a characteristic that people may not quite have twigged, but we were happy to participate in, namely that for people who follow technical analysis, and I'm sure Paul will be able to relate to this, by all accounts, the single biggest technical breakout in history was that of the commodities markets during the 1970s, after they basically formed a 100-year base. And arguably the second biggest technical breakout of all time took place last week when silver finally broke up from a 45-year cup and handle. And for market technicians, and we're not market technicians, but we certainly respect them, for market technicians, that basically suggests that the silver price is not topping, it's going to the moon.
Yeah, basically. Yeah.
There's a lot of people who are saying that. I mean, if based on
So
that
I
cup
think
of handle,
we can debate the fundamentals, but from a purely technical perspective, all signs are green.
yeah, again, technical analysis is often in the eye of the beholder. But if you the logic behind a cup and handle is that you go from the distance from the rim to the bottom of the cup, which in the case of silver, the rim was at $50 and the bottom of the cup was at $3.50. So the distance is $46.50. And then so the target on the cup and handle would be the rim, $50 plus that distance, $46.50, which would take you to $96.50, which we've already broken. But however, because that base was formed over so many years, it's a 50-year cup and handle, as you said. There's an argument that you should do it on a log chart basis and on a percentage basis, in which case the silver target goes to like above $700. And, it's silver, so it's possible because it overshoots on the upside and it overshoots on the downside. It'll probably go to $700 and then correct to 100 and everyone will lose their shirt, even though the silver miners only need, they only need like $60 silver to print money. But anyway, I mean, like I'm so aware of silver's potential to disappoint. I think I've just had it beaten into me over 20 years or more of looking at it. But so, my argument is you should keep a position in silver at all times and be cynical.
I think my response to that would be, and this may well sound like special pleading, but my response would be the 1980 high during the Bunker Hunt fiasco as became is not a fair comparison, because that was basically a handful of people who were trying to squeeze the market, and it was entirely speculative, and then the market forces intervened. The difference this time around is this is a structural, coordinated grab for a real asset that in many respects will be price insensitive on the part of the people doing the buying. In other words, it's not so much about the price, it's now about access, full stop. You can't have a modern economy without this. This has just been re-identified or recategorized by the US as a strategic mineral. The Chinese have just started embargoing it, so it's increasingly difficult to get your hands on the stuff. The London market's basically broken. The US market seems to be in the process of breaking. So when the COMEX in 1980 said, introduced silver rule number 7, they could do that because they had the lion's share of control of the market, but that's not the case any longer. And so for me, I don't attribute a price target to this. It's merely more sort of background information. But it seems to me that it's a complete game changer. So it's the reason we've described silver as I would describe it as even at current levels, an opportunity to generate generational wealth that I haven't seen before in my career. Potentially.
Well, it's already happened, Tim. I agree. I mean, look at Mr. Mann I told you about with his 95% Highcroft position.
So you have to kind of respect people with that degree of commitment, because
conviction,
that's when fortunes are made and also lost.
Yeah, well, yes.
The important thing about silver and its very simple technical setup is that you had gold breaking into new highs, substantial new highs, whilst silver was well below its previous high. The bigger the high that has been in effect, the more significant the breakout is. And so because it was such a long-term breakout, it's telling you that you will have a very big move. So in some ways it's just a catch-up play, but it was that the highs lined up so beautifully that it became such a compelling breakout point. The other important thing technically is that with those targets, they are more rule of thumb. They're not, this is where the market's definitely going. It's more, if you take a position, what should your risk reward be? Where should you think about putting stops rather than it should definitely stop here, although sometimes that does work quite nicely. But I think the point that that we've talked about quite a few times on the pod has been that I was watching palladium and platinum, and even the very bullish people who like Dave Hunter weren't really looking at those markets. And for me, those were the really important tells that everything was going to start to move very aggressively, because they did nothing and then suddenly broke out, and all those charts looked like they were ready to go. They were basing out. And the way I look at technicals is that it's a kind of holistic look at everything together. Now we've got what is very much a broad bull market. And I follow Dow theory, which basically says that when everything's moving together, you've got a proper bull market. When that was important was, for example, in 2011, when everyone was saying that gold would go to the moon when it topped out. Gold was the only market that was holding up. Most other markets were just falling or sideways. And that was telling me that that move was invalid and it was probably going to break down, which it eventually did. So on the other side of the coin, given that everything is now moving up, we are in a structural bull market, which means that I agree from a technical point of view, for your fundamental side, that it does look like there's more to come. But to be fair, I think Dominic's description that buy silver and then be skeptical is absolutely brilliant, because it has gone so far so fast. We are due some form of correction, I would have thought, but I don't think it doesn't feel like it's over. It feels like this is just, it needs a pause before it starts running again.
I mean, my question for Dominic would be, I'm increasingly minded to believe that what we're now living through is not just a rerun of the 1970s, but it's also a rerun of what Mises referred to as the crack-up boom, which is when everybody starts to twig that paper currency is becoming literally worthless, so they scramble to convert it into something more tangible. Would you have any sympathy with that view?
Well, I mean, yes, I have a lot of sympathy with that view, but this crack-up boom has been threatened to come for so long, and then you think it's coming, and then it doesn't quite come, and then you think it's coming, and it doesn't quite come. And
but for me, the what's different this time is I think this really is the end of the current system. The moves are occurring with such magnitude and ferocity. I mean, and you see this, for example, just on the day-to-day price action in silver, where you think, well, Mr. Salami is going to get to work when the US market opens, and then it gets taken down 5%, and then the next day that 5% is just written off. It goes to a new high, and it's like, despite the best efforts of the powers that be, they can't control this. It's like riding a tiger. So it feels to me like this is how markets behave when the monetary system's about to change globally. It's not business as usual. It's something probably a lot more significant than that potentially.
I have a lot of sympathy with that view. I wouldn't I wouldn't say it's definitely going to happen, but it feels like something big is afoot. I agree.
So turning to your book, Dominic, the timing could not have been better, and I think gold was possibly in an upward trend whilst you were writing it. Obviously, you can tell us about that. But question one would be, did you decide to write it at this point because you could see gold becoming so much more important? Or was that just a coincidence of you writing it?
And also give us the title of the book for people who haven't bought it yet.
The Secret History of Gold. And it's published by Penguin. And I'd written a book about tax. I'd written a book about Bitcoin. I'd written Life After the State, which is about, money and free markets and getting rid of the state and individual responsibility and all of that, limited government. And so gold was the next logical thing to write about. And I'd done a show about it at Edinburgh, and, I've got 20 years of writing about it. So it was just the next obvious book to write. But the fact that it was happening, I started writing it, at the beginning of what looked like it was going to be a long-term bull market was a nice what do they call it, serendipity. But I was saying to my publisher, we have to get this out quick, and they were like, no, I wanted to get it out 6 or 9 months earlier than it did come out, even a year earlier than it did come out, because because I wanted to catch the bull market. So everyone goes, Merrin Somerset Webb described it as possibly the best timed book ever.
Yeah.
But it would have been even better timed if it was come out a year sooner, because the lead time from finishing a book to actual publication, it's so long. You can't understand why it takes so long, but it does. And it hasn't even come out in the States yet. It doesn't even come out till May.
Oh.
But hopefully I think we'll still be in a bull market come May.
Yeah, well, it's definitely going to be topical, that's for sure. So within the book, what do you suspect that gold's role in history has been misunderstood, or perhaps deliberately misunderstood?
Well, I argue that when people talk about gold and money, I think it's really important to define what money is. And there's, the unit of account function, there's the store of value function, and there's the standard of deferred payment, which kind of comes under store of value and currency. And then there's, the medium of exchange. And because so much value is in a tiny gold coin, we've never really used it that much as a medium of exchange, except for big things like, a house or a racehorse or a suit or something like that. The equivalent of transactions that are worth many hundreds, if not thousands of pounds. But as just for day-to-day currency, buying a milk, buying whatever basic foodstuffs and so on, we've always used silver and copper and nickel. And so gold. And so when people go, we're not going back to the gold standard, what, you're going to go into Tesco's and buy your groceries with gold? Well, no, you're not. And so, but even though gold, hasn't been official money in any way since 1971, it kind of is official money, albeit unofficially, if you see what I mean, because of the fact that central banks own it and have been building up their reserves. So it is official money, but unofficially. But it's a reserve asset. It's a store of value rather than a medium of exchange. And that's what gold has always been. By the way, it's a brilliant unit of account. It's a much better unit of account than fiat. And the only reason we use fiat as our unit of account, the pound and the dollar and so on, is because we have to declare our taxes every year in those currencies.
Yeah, it's compulsory. We haven't got a choice.
But gold's a much better unit of account. But yeah, because if you use like the pound as a unit of account, well, the pound is losing 7% every year to money supply growth. So, in other words, it's being debased by 7% every year, and a pound today is not the same as a pound 5 years ago, is not the same as a pound 20 years ago. And in fact, against gold, the pound has lost more than 90% of its value over the last 25 years. So why are you using the pound? And if you go, what was the cost of, you could buy a house for a few pounds once upon a time, and you can't now. So the pound fiat is a terrible unit of account, and gold never changes. It's one of the whole thing is it's immutable, and it's been here since forever, and it'll be here long after we're gone. And so gold is a much better unit of account, and it's a much more truthful unit of account. And when you look at oil prices and house prices and wages and things like this over the long term, and you measure them in gold, you get a much truer picture of what's actually going on.
I think the problem for so many people is because we had an unbacked system for basically everyone's lifetimes. No one can realistically remember a time when we've actually had hard money, real money.
Well, if you look at, I've got a brilliant chart in the book that I'm very proud of consumer prices in the 19th century. And between 1821, when Britain went back on the gold standard, and the beginning of the US Civil War, prices fell from above 9 on the index to below 4. So they more than halved. And that's what should happen as human beings get more productive. And then they spiked up again with the US Civil War, and then they came back down again, so that they more than halved again by the big time of the beginning of the First World War. And that's what should happen. Prices should come down as we get more productive. Money's value, the purchasing power of money should increase, but it doesn't because of fiat. But anyway,
that can't happen in a debt-based monetary system, sadly.
No, of course,
because the debt requires constant expansion.
Well, exactly. But so, the question was, what is gold? And that wasn't the question, but it sort of was the question.
Yeah.
But with the point is, we're using gold. Stone Age man, found nice little gold nuggets in a stream when he was walking along, hunting and gathering, and he started to wear it, and he started to give it to other people as reward, and maybe use it as a tool of barter and so on. And gold was the very first metal that human beings used. He used it long before he was using copper and whatever to make tools and iron and so on. And all the other native metals. Gold was, like, by tens of thousands of years, the first metal that human beings used. And we used it to store wealth and display wealth as a reward, as a prize, as an expression of gratitude, and also to a little bit as a medium of exchange. And that's what we use it for now. And, even like last year, Russia flew 4 tons of gold to Iran to pay for drones that it used in the Ukrainian war. So even now we're using it as a medium of exchange, but only, in extremis. So it's gold. What is gold's future? It's exactly what its past was.
The interesting thing about gold is I don't think you find anyone who won't take it under any circumstances.
Well, yeah.
Who would ever...
if somebody wants to hire Dominic Frisby to do a voiceover and they want to pay me in gold or Bitcoin, I'd much rather be paid that way than in fiat. But I'll take whatever money you're offering.
It's so universal, and it's so universal within culture, within films. It's always about gold. The Hobbit's about gold. Last night I introduced my kids to the film Jason and the Argonauts because I thought this is just I really wanted to watch it over Christmas, didn't have time, and it's always about gold, the golden fleece. Would you say that gold is also more about owning gold is more about power than wealth, or the control that governments have? Because I've heard Tim say a few times that if we were on the gold standard, there wouldn't have been a World War II.
Well, there wouldn't have been a World War One beyond December 1914. Nobody ever could have afforded to prosecute it.
Well, exactly. Tim's absolutely right. And this is an argument I make many times over. There was not the gold to pay for that war to go on to the extent that it did. And it was only by abandoning the gold standard and creating money through the fiat system that war was able to be continued as long as it was. When you were talking about Paul there, nobody's going to refuse gold. What's so beautiful about it is it truly is universal money. It has been money since forever, and it always will be money. And you could take a time machine to any culture at any point in history or in the future, probably anywhere in the world, and they would know that gold has value. You couldn't do the same with a pound note or a digital pound note.
Or any other currency, because you'd look at it and say, what's this? Depending on where it is.
It is universal money. And the only universal money that exists. And I know I love Bitcoin. I'm an advocate of Bitcoin, but it's not universal in the way that gold is. Now, coming to you mentioned Jason and the Argonauts there, and gold's role in ancient myth. What Jason was basically, he's seen as he was an early prospector, and he set out with his team of adventurers, the Argonauts, which included Hercules and Orpheus and various others, Castor and Pollux, and they were going in search of adventure, but they were going in search of wealth, and they were doing exactly what the conquistadors did, what the prospectors who went to Australia and the California gold rush did, and what the guys who went to Brazil in the 17th century. All these people in search of gold because they were going to find the gold and it was going to transform their existence. And what's really interesting about the story of Jason and the Argonauts is, these guys left Greece, Iolkos, and they were seen as the first guys to navigate the difficult currents of the Bosphorus, and they went into the Black Sea, and they crossed across the Black Sea and ended up in Colchis, which would be Georgia today. Now, what had happened is that rumor of this sheep with a fleece of gold, and this fleece of gold was hanging in a tree, had come back to Greece. Now, when you learn that in Georgia in those days, in Colchis, they used sheepskin to pan for gold. They would stretch a sheepskin over a wooden frame and they would stick it in the river, and the gold fragments would catch in the wool of the sheepskin, and then they would hang it out to dry in a tree nearby, and then they'd comb out the gold. So that is how they panned for gold. So you can see how that basic practice, as it spread west, with storytelling, became the myth of this golden fleece hanging in a tree. Now, if you've just got a load of gold hanging in a fleece in a tree, you're going to guard it with dragons and bulls with hooves of iron and all the rest of it, if necessary, because it's worth a shed load of money. And I love how this practice became myth. And so, yeah, I dwell on that little story quite a bit in the book.
Wow, that's a coincidence, isn't it?
There are no coincidences.
I was like, I've just seen it, and I couldn't tell you that sort of detail. I just couldn't believe how you just recounted all those details. It's absolutely fantastic.
It suggests there's nothing new under the sun. That so much of what our culture is about is things that people are just reinventing and re-narrating for the what seems like the first time. But you realise these are like stories as old as time.
Well, exactly. And what is so wonderful is that, left-wingers will hate this, but, what motivated the conquistador or the gold prospector or Jason was greed for gold. I mean, in the case of Jason, he was told to bring the fleece back to the king, and then he'd become the Iolcos' rightful heir. But it was greed for gold. It was greed. Self-interest. I'm going to find this gold and I'm going to transform my life. But in the course of going out and exploring for this gold, new things get discovered, new places. In a case of America, the entire continent of the United States, new practices, science develops as people find new ways to mine this gold and mint this gold, weapons, everything. Humankind progresses because of this basic thing, this basic urge of finding gold to transform my life. And the sort of side effect is that humankind progresses and evolves, and science develops, and then as science develops, art develops, and it's a sort of self-reinforcing cycle. But it all comes down to this basic greed for gold. And it is, as I say, it's inspired people to do the most incredible things, and it has driven humanity forwards.
What's the name of the Morricone piece? Is it The Ecstasy of Gold?
Yes. One of the greatest pieces of music ever composed.
And the story I like, I forget the source of this one, but it's the analogy, and I think you reference it in your book, the story of the guy who goes on a sea voyage and he keeps his gold with him, and then they come across a storm, and so he takes his gold and puts it around his neck, and then the order goes to abandon ship, so he dives overboard and immediately sinks to the bottom of the sea. And the question is, as he was sinking beneath the waves, did he have his gold, or did his gold have him?
Yeah, Ruskin.
Ruskin.
Yeah,
that's a fantastic story.
Yeah, it's great. Love it. And it's the truth. Like all these prospectors, it doesn't matter if it was Jason or Pizarro or whoever you care to mention. They're successful with their prospecting. They make huge amounts of money. They come back, and then everything goes tits up.
So, with regard to kind of the skeptics of gold and the idea that
it's a 5,000-year-old bubble,
yeah, and the
50,000-year-old,
the barbarous relics. What are these people missing? Why do you think they persistently think this way, and what could change their mind about it?
Well, there's a great Ron Paul quote, which is that, I'm going to paraphrase it, but it's something like, because gold is honest money, it is not... because gold is honest money, it is not trusted by dishonest men, or something like that.
Right. Yeah, I see. But that also referring to just the general public who just think, well, why would I own it? It doesn't pay any interest. You dig it out of the ground, it just sits there. Why should I bother with it? Why don't I just invest in AI companies?
There is that reason from a the yield, people who like yield on their investments and growth and all of that kind of thing. And Warren Buffett Warren Buffett's father, Howard Buffett, was a big gold sound money guy. A lot of the sound money advocates quote Howard Buffett, and so Warren Buffett grew up in a household where his dad was calling out for a return in the 1930s. His dad wanted to return to sound money, and what Roosevelt did was dishonest, and the fiat system is evil, and all of that stuff. Warren Buffett will have grown up with gold bug arguments around him. And yet the great Warren Buffett line is, and again I paraphrase, we spend millions digging it out of the ground, we get it out of the ground, and then we stick it back in the ground and spend millions guarding it. Anyone from Mars would be scratching their head. And Warren Buffett likes growth. He likes in businesses that are growing and expanding and pay dividends and all of those things. And he never liked gold, even though he grew up in this sort of gold bug surroundings. And, but I have a lot of sympathy with that argument. But again, the gold is there just to keep what you have.
This is exactly the point. You've beat me to the punch.
The other thing is there to grow what you have.
Yeah, because I think that the whole Buffett thing is, I think he speaks somewhat with forked tongue. And this is also the guy that tried to corner the silver market himself. So it's not exactly consistent. But the point is, the point I'd make would be the one you've just made yourself, which is gold is not a get-rich investment. Gold is a stay-rich investment.
Precisely. And mining is a get-rich, but gold itself, you're just keeping it, And, I bought a lot of gold, and I might sell some of it next year because I want to buy a house. And I'm just looking at the gold to house ratio, and I'm thinking, well, we're coming back into the buy zone, so there we go. Or I might just buy the house with my ill-gotten gains and keep the gold and give it to my kids. I don't know yet.
Yeah, it's interesting. Actually, I was going to ask about that. What sort of conditions would you be expecting? And I think this is a great question for Tim as well. What are the conditions do you think that the governments could be, or the world could be in which you would decide that owning gold is not such a good idea anymore?
Well, do you want to go first, Tim?
Yeah, because this ties in with the whole question about when to take profits in gold. And
yeah,
my response is always the same, which is it's not a price-based phenomenon because the dollar is an inconstant store of value. So, for example, one argument is that an analogy which I think is very valid is trying to measure the price of gold using the dollar is like trying to measure a suit using a piece of elastic. So the bottom line is that we're not comparing apples with apples. So my response is we would look to take profits, rotate out of the gold and silver holdings that we have on a conditional basis when the circumstances that caused us to buy it in the first place have been addressed by the authorities. And the primary example of why we buy it in the first place is because the official national debt of the US is $38 trillion, growing at $1 trillion every 100 days. So we would look to rotate out of gold when the US monetary authorities basically get religion and start to address their debts in a sensible and their budgets in a sensible way. Since I think that is a very distant prospect, we're going to be holding gold in the interim.
I remember when it was 2 trillion and everyone thought that was a lot.
Yeah.
Well, trillion here, trillion there. Pretty soon you're talking real money.
I would agree with that, and but another reason is just when relative to gold, whatever you're looking at buying, whether it's a house or an oil company or a tech stock or whatever, is just so ridiculously cheap. You just go, actually, that thing offers more value, and so you roll out of gold.
So while you were doing the research, you were saying that you've actually got a show that's behind it. So you must have been doing this for years. It might not have necessarily been something that you discovered while you were writing the book, but what was the most surprising thing you discovered about gold through your history, through your research?
Oh, that's a question. I'd have to go away and think about that, but what springs to mind is this idea of gold being the great motivator. This thing of gold driving humankind to take risks and invent and innovate. And I'd never really thought of gold as this motivator. So I think that's one psychological phenomenon that I've stumbled across. I suppose in the world at the moment, the open secret is just the phenomenal amount of gold that China's been accumulating. And at the moment it doesn't matter, but that's going to matter at some point. That's going to matter, and that's it's the biggest story in world finance. China's got anything from 2 times to 10 times as much gold as it says it does.
Do you think going back on a gold standard would be a good idea?
No, I don't think it can work. The if you look at the gold standards of the 19th century, Britain, Newton was trying to put England on a gold and silver standard, and he was trying to do it at a rate of 20-1. But the silver kept leaving the UK because it was worth more as bullion on the continent than it was as currency in the UK. And then eventually they started exporting it to India and China because it just fetched greater value there. And so the silver kept leaving, despite everything that Newton was doing. But at the same time, the Portuguese discovered gold in Brazil. And the Portuguese and the British had very good trading relationships. And the Portuguese used their gold to buy British goods. And something like a quarter to half of all the gold that was discovered in the gold rushes in Brazil ended up in Britain. And it was that Portuguese gold or Brazilian gold that enabled the gold standard. And it was an accidental gold standard. But in any case, it's called the gold standard. But the guinea was still the gold coin. It was still the coin of the realm. And so people were handling gold, on a day-to-day basis, those rich enough to. And then, of course, we got involved in the Napoleonic Wars, and William Pitt was trying to fund Napoleon's enemies. And so he kept, because he didn't want French revolutionary fervour coming to the UK. And so he sent all the gold abroad to fund Napoleon's enemies. And it was because of the St. George on the gold guineas. Money was known as the Golden Cavalry of St. George. And the result was that all the gold left the UK and we had no gold left. And the Bank of England wrote to William Pitt and said, we can't redeem notes against gold. Can you take us off the gold standard? And so William Pitt did. And then the Napoleonic Wars happened. And then in 1816, they had a great recoinage and this gold sovereign was invented. And we formally went back on the gold standard 1821. And yet again, though, gold was back in physical gold, was back in circulation. And the gold sovereign became the pound coin. And all through the 19th century, people were handling gold sovereigns. So gold was actually physical money. Of course, we were using notes as well. And then the rest of the world was on a bimetallic standard. But then so much gold was discovered, first in California, then in Australia, then in South Africa, then in Canada, that huge amounts of gold were created. And that actually enabled silver to be abandoned as money in the second half of the 19th century, so that by 1900, in 1850, the only countries in the world on a pure gold standard were Britain and Portugal. By 1900, every country on the world was on a pure gold standard. They'd abandoned silver, except for China. And so it was the increased supply of gold from the gold rushes that made those gold standards possible. Now, but the point is, we were still handling gold on a day-to-day basis as physical cash. So even though it was nominally a gold standard, the actual physical gold was being used. Now you compare that to the gold standards of the 20th century. Britain obviously went back on the gold standard in 1925. And there's questions about the rate that Britain went back onto that gold standard at, and it went back at pre-World War I rates. But they didn't issue any gold coins. In the entire 1920s, we went back on the gold standard. They didn't mint any gold coins, and there was no gold in circulation. And British citizens couldn't redeem their notes for gold. It was only like governments could do it at the state level. It was a bogus gold standard. And then, of course, America was on a gold standard, but Roosevelt confiscated Americans' gold in 1933. So Americans were on a gold standard, but they weren't allowed to own gold, which is completely bogus. And then of course America debased its own gold standard anyway in the post Bretton Woods era. So the 20th century, so those were actual gold standards because the money represented gold, but they were bogus because you couldn't exchange your money for gold because you weren't either there was no gold in circulation or you weren't allowed to own it. Now, if you're to have a gold standard, then people have to handle physical gold on a day-to-day basis. But the problem is, because of modern technology, we don't use cash anymore. Like, 1% of money is cash, and it's only sort of purists that carry cash on them. And old people. My daughter complains that cash is a what's the word she used? Long meaning long and boring and drawn out and all the rest of it. Kids just don't use cash. We don't use cash anymore. And so for that reason, a gold standard isn't possible because we don't handle gold. And so any kind of gold standard would be a representative gold standard, a bit like the 20th century where you could, go into a bank and physically swap your currency for gold and take out gold. But it just wouldn't work because we don't actually handle gold. So even though gold is a reserve asset, and you could sort of say that the currencies are backed by gold, you can't actually swap it for physical gold. And you can buy gold with your cash. So I just don't think a gold standard as people, I don't think when people say gold standard, I don't think they understood what a gold standard is. Either gold is money and it's in currency, or it's representative, in which case it's bogus. And so therefore, I don't think a gold standard, as people understand it, as we saw in the 19th or 20th century, is possible. I don't think it will work. But that's not to say that gold isn't going to have a role in the monetary system, because it clearly does. It already does, even if unofficially.
I'd make a separate point, which is if we want to have a fairer, more honest system, we have to get rid of or revise the current banking and central banking system. And that the idea that you can have an entity that can generate money, create money out of thin air, and then lend it out at interest is inherently wrong and immoral.
Well, I can agree more.
So if it were down to me, if I were appointed Lord High Ming of the universe, first thing I'd do would be scrap central banks in entirety, and then have a whole bunch of commercial banks duke it out amongst themselves.
So that would lead me to my next question for Dominic, and obviously Tim, if you want to jump in on it, is how do we fix the money? What could we do? Because I would say that a gold standard to me means that the money that I have, whether it's in a bank or whether it's a note, you could go somewhere and exchange it for an amount of gold. That's what I would understand, which is technically possible in our system today, but obviously it's not going to happen. The downsides of that would be that you couldn't grow the money supply, which would mean that the economy couldn't grow fast enough.
You could only issue as much money as there is gold to back it.
Exactly.
But it's just not practical.
Right.
Because of the role of debt.
So then how do we fix the money?
Well, I think it fixes itself, and it already is. And, we've seen the rise of cryptocurrencies, and, they're a free market solution to all of this. Bitcoin is the greatest, technologically, the greatest form of money ever. Gold, Mother Nature's given us gold, which is equally brilliant in a physical way. One is physical, one is digital. And I just think it happens. It is happening organically. And, part of this huge upsurge in the gold price is this organic reparation of the money system. It's not going to be fixed by a government planner. It's not going to be fixed by a central banker. It's not going to be fixed by an MP. They don't understand it. They don't have the remit, the electoral remit to do it. If we went to some kind of independent money, it weakens their power. So no politician is going to do that anyway, even if they did understand what the problem is. But I don't think in the entire House of Commons there's a single person that understands it. In Congress in America, there are some people that understand this, but not in the House of Commons. Now that Steve Baker's gone, he was like the one person who got it. And so I suppose Farage gets it to a certain extent because he was a metals trader. He understands gold, but doesn't mean he believes it. So I just think it'll happen organically, and we'll probably have a situation of we've already got it, of Hayekian competing currencies, and the best currencies will win. And at the moment, more and more people are using gold, silver, and Bitcoin as stores of value. And I guess in time, their role as medium of exchange, certainly Bitcoin, will increase. I just think it's happening organically. It's not going to happen, but governments will react. They won't plan it and design it. There's no Isaac Newton designing a new monetary system for the world. If anyone's Isaac Newton, it's Satoshi Nakamoto, and so there isn't the willingness in government. And what they'll do is what they always do: is they'll react to the circumstances at the time. And in the case of socialist Western Europe, they'll probably make it illegal. They'll probably try and confiscate it. They'll introduce unrealized capital gains, all of these things. And places where markets are a bit more free, you'll just find people using it more and more, and taxes being payable. I think this new Bitcoin bill in the States, they're actually going to allow you to pay your taxes in Bitcoin.
But if you could start with a blank piece of paper and fix the system, would you have a blueprint for how that might work?
I would just let the market decide.
So you wouldn't. So basically, you wouldn't change anything. You just let the system purge itself of its, kind of rotten fiat currency.
Well, history shows us that top-down bureaucracy never ever works. So one person or one entity can't or won't be able to control an economy or a monetary system. It as Dominic alludes, it grows up organically.
Yeah. And gold is always, and you get technology. Somebody came along and invented the technology of coinage, which is probably the most brilliant fintech of all history. We still use it today, and it was invented, 700 years before Christ. But they were still using gold and silver as money, and the technology of coinage enabled gold and silver to function even better as money. And now we have digital technology, and we have the printing press, and all these various technologies will be adopted by the money system. And you can't, somebody's designed a Bitcoin, but then it's an open source thing. So I just think it happens organically according to whatever the technology that's available at the time is. But the point about money now is it's digital, it's not physical anymore. And so the role of metal, which historically it's always had, is somewhat redundant.
So if somebody said to you, gold or Bitcoin, you have to choose, what would you choose?
Well, you don't have to choose.
I know you don't, but I'm just saying it's like sex or chocolate, that sort of question.
Well, you can.
Can't we have both?
No, it's one or the other.
At the moment, I'm saying gold because gold's in a bull market. But when Bitcoin's in a bull market, I'm going to say Bitcoin.
Yeah, I know. It's like choosing one of your, favorite children or whatever. But it's
no, choosing that would be much easier.
Have you been troubled by anything you've heard on this podcast?
So, looking ahead,
they both have roles to play.
Yeah, no, absolutely. I was just curious about if you had to choose one or the other and just stick with that. Do you
have a Revolut account, Paul?
No.
Do you have a Wise account?
No.
Okay. Do you, Tim?
I've got a Revolut account.
Okay, so you go on your Revolut thing, and on Revolut you can have, I don't know how many national currencies there are in the world, probably more than 100, but there are at least 50 currencies available in Revolut that you can receive and store cash in, plus various cryptocurrencies as well. And I just think we go into a world where, we're going to have more and more apps like the Revolut app, and for each transaction that we do, there'll be a little choice as to what money you use.
Right.
And we'll use that. And it might be a national currency, it might be a cryptocurrency. And there are obviously gold-backed cryptocurrencies, or there's hundreds of them, but they never take off.
I didn't know you could do that. So you can decide to trade or to exchange your sterling into dollars, into euros, into gold, into whatever.
I could send Tim, 50 euros if I wanted, and Tim could send me €50, and I could probably send him 50 Thai baht, and Tim could send me 50 Thai baht. I mean, it wouldn't make much sense because we're not in Thailand, but there is the possibility to do that. And I know you can buy and store crypto on there. I'm not sure if you can actually send it yet, but it's just a matter of time before you can.
Right.
And if Tim wanted me to pay him in Bitcoin for whatever it is, I could do that.
Right. I didn't know that existed at this point. And that actually brings us to we had a Karim El Alyoubi on the pod, which will go out. Well, it may have been out by the time we put this out. I'm not sure on the timing, but we were discussing the role of Bitcoin, and the argument was that you can't actually transact in it. And I was like, well, where's Dominic when you need him to bring
Well, what do you mean you can't transact?
Well, no, I mean, his point, to be fair, was that people aren't, the man on the street isn't transacting in Bitcoin. You're not buying your coffee. It hasn't become prevalent in the way that other mediums of exchange have. And therefore,
I just don't agree with that.
Well,
I just don't agree with that. And it's not designed. You're not supposed to use it to go and buy cups of coffee. That's not what it's designed for. It's money for the internet. But in any case, like if I go to a show and I sell my books and mugs after the show, there's three ways people can pay me. They can pay me in cash. They can pay me by credit card, and I've got a little phone thing, or they can pay me by Bitcoin on the Lightning Network. And obviously cash is extremely reliable because somebody just hands it straight to me. But the Lightning Network settles quicker than the credit card does. It settles quicker. So the idea that you can't use it, people do. It's just he doesn't know anyone that's using it.
Yeah, I think it's a lack of not understanding, but it's just that people say, "Oh, that's all tech," and I'm a bit worried about it. And you've got to
then they should buy 20 quid's worth and practice sending and receiving it.
Yeah,
I mean, just because they're not ignorant doesn't mean it doesn't exist. And you go to a Bitcoin conference, nobody pays you. Well, maybe 10% of people pay you with a credit card. Everyone just uses the Lightning Network. The Lightning Network is a thing of brilliance.
Absolutely, but I think that the point being that if you were to let your let your mum loose on it, would she be okay? And
she'd be fine.
Yeah, I mean your mum, yeah, but
my mum's useless. But I mean, technologically she's useless.
If you've been troubled by anything you've heard on this podcast.
But you can send, it's the Lightning. It's so simple. It's just like a wallet. It's like going click with a credit card. You just do it with your Lightning Network.
Yeah, I think
the idea that old people can't do it. Of course they can.
I think the thing is people just don't understand Bitcoin. That's the problem.
Everyone who doesn't understand it has not tried it. They just go, "Oh, I don't understand it." And you go to them, "Well, get a wallet and I will send you some Bitcoin and you can send it back to me and now you understand it." They just don't even do that.
Yeah. So
people don't move their bank accounts.
It's like going, "Oh, I don't understand how the simple mail transfer protocol works. What's simple mail transfer?" And then they're sending emails every day.
Yeah.
You're like, "Well, that is simple. You don't need to understand simple mail transfer protocol to send an email."
So look,
it's a stupid argument, and it's a lazy argument, and it comes from people that have been too bone idle to actually try it out.
So looking forward to what would be, it's a fair bet that in the next sort of 3-5 years, maybe sooner, there's going to be some form of crisis. And
did you say years or
months?
Hours?
Well,
weeks. Yeah, I was going to say.
Who knows? Pre and post that situation, what do you think the money situation will be? Do you like, for example, do you think the government are going to use it as an opportunity to try and bring in CBDCs, or do you think people will turn to Bitcoin? I know it's a very difficult question to answer because
I'm happy to answer it. I think CBDCs, they're trying to bring them in Europe. They've already nixed it in America. They won't work because it's too big an ask. One of the reasons why the fiat system has survived as long as it has is because of all the fintech, the payment architecture that have been built on top of the fiat system. It's so brilliant, a lot of financial technology, all the payment systems, the credit cards, the Starling Bank and Monzo Bank and all these little things that you can go into a shop and just click on a machine and you're able to send money. That fintech architecture is so brilliant that is what has propped up the fiat system. It's not the governments, the way they've conducted it. It's the architecture that's been built on top of the system.
Well, the system survived despite governments.
Well, exactly. And for CBDCs to come along, who's going to build that architecture? It doesn't exist. And so it requires a huge amount of building an architecture, and people are only going to build that architecture if they think there's some kind of profit in there for them. And so how are you going to encourage, well, people are going, well, there's no profit if nobody uses the CBDCs. So the only way they can make it work is by subsidizing it and spending vast amounts of money on it, a bit like with wind technology or solar or something. But the only difference is there isn't the underlying argument that if we don't spend this money on the thing, the world's going to end. They've got to change so many consumer habits, and the only way they can do it is through vast amounts of subsidy, and there is not the money to pay for that subsidy or the underlying argument to justify it. So they'll try it, but it won't work, and that's Western Europe, and America has already nixed it.
I quite like the idea of wind-powered CBDC. Because that sounds like a surefire winner.
Sure. Well, it's powered with methane already. So it just won't work. They might try it, but it won't work. And I'm very confident about that. And you asked me at the beginning of this interview, Paul, what my predictions that I got wrong last year were, and one of them is I thought sterling would fall, and it didn't. It held up pretty well. Yeah. And again, it's crept up a little bit this year, but that's mainly a function of just the US dollar getting weaker. But sterling has still lost 40% of its purchasing power since 2020. A large majority of that came with all the money printing in COVID, but it's still losing 6-7% every year to money supply growth.
Did you say 40% or 14?
40.
Okay.
And this is all, there's a thing, what's it called? There's a Trueflation.
Yes.
This is all data from Trueflation. And it's an astonishing amount. And you can bet that over the next 10 years, it's going to lose another 40%. And you just know that this is coming. And so I just say to everyone, do not keep your money in cash. Store it where the governments cannot touch it. Store it in gold, store it in silver, store it in Bitcoin, divide it by those things, but do not store it in cash, because it will lose its value. And so, even if sterling doesn't fall relative to the euro or the dollar or whatever, I think it will, because I think some kind of sterling crisis, it's a bit like the unraveling of the Japanese bond market. It's just so inevitable it's going to happen. What's just confounding everyone is exactly when. But,
every Labour administration, apart from that of Tony Blair, which missed it by a matter of months, has ended in a currency crisis.
Well, exactly. And it's just like, it just, these things, they don't happen, and you're like, well, why hasn't this happened? And it's partly because Rachel Reeves is doing everything to keep the bond market happy, that she's giving that precedence over taxpayers and so on. But in any case, sooner or later it will happen, and that's when you want to, that's not when you want to be buying gold and silver. That's when you want to make sure you already have your position.
Do you think, to change topic slightly, do you think that Davos is much less relevant this year than it was last year?
Yeah, and I thought it was even more. I think it's marginally more relevant this year than it was last year because of, Trump's speech and so on. But last year it was way, way more irrelevant than on previous years. That New World Order, World Economic Forum, all that globalization. As Lutnick said, globalization has failed.
Well, I find that a very encouraging development.
Yeah, me too. And they're going to blame, we're going into some kind of conflict. There's a big power grab, there's a land grab, there's a resource grab going on at the moment.
Yeah.
They're going to go, and they'll blame it on, Trump or Putin or whatever. They won't blame it on what led to Trump and Putin and globalization and all the free market, not free market, all the bollocks that came with it. And they won't, they'll pin it on the wrong thing.
So looking globally then at other currencies potentially, I mean, so obviously you've made a very strong argument for Bitcoin and gold. Do you see any role for, say, the Swiss franc currency as being a protection going forward, or does that Is that one step away that you'd rather not take?
No. Well, I mean, I've got some Swiss francs in my Revolut account, and I try to have lots of national currencies in there, but national currencies generally are going to be weaker than gold, and even owning the S&P or Bitcoin, whatever it is, because devaluation is built into them. It's part of their design.
With it being January, and you got a fantastic story of turning your health around in the sense that you are now super fit, and it's especially a man of a certain age. That's very, admirable that you've managed to do that and maintain it. Have you got any New Year's resolutions with regard to sort of your health program, and how is all of that going? You still look in really great shape.
Yeah, I'm in good shape. I try and do weights twice a week. I try and make sure I at least go for a long walk every day. I run quite a bit. I would like to stretch more than I do. My weight's actually crept up. I got to 67 kilos at my lowest point, and I'm now 75. So I've put on 8 kilos. As I've taken up fasting again to try and get back. I think I probably want to be 72 or 73. When I was 67, I just looked like a kind of lesbian Gary Lineker, and all my friends were having interventions with me, telling me I looked ridiculous. But so that was maybe a bit too much. Although I felt fantastic. I find actually bizarrely running doesn't help me lose weight because I get so hungry afterwards. I eat loads, but I'll be doing all of that and trying to stay in shape. And the one thing I'd like to increase is more loosening exercises, more stretching, and I'll definitely do all of that. And I try and do a dead hang every day and so on.
What are you up to on your dead hangs?
Well, I got as high as 3 minutes, but
Whoa.
I'm back down to about. I could probably do maybe 2 minutes 20. Now, again, that 8 kilos from 67 to 75 makes a big difference on a dead hang.
Definitely. I've tried to do them, and it is very, very hard. Those seconds tick by extremely slowly. Yeah, no, that is extremely.
I find it's very
impressive.
good to listen if you can listen to something else while you're doing it and try and distract yourself from the pain.
Yeah, absolutely.
Keir Starmer's collected speeches. That sounds like concentrated pain.
Oh my God, that's like torture beyond belief.
Tim, I was going to sort of wrap things up unless there was anything that you...
No, nothing to add.
Dominic, was there anything we should have asked you that you wanted to
Well,
talk
you wanted
about?
to ask me about a piece of media.
No, we are going to do that. I just wanted,
okay.
just for the main pod, was there anything that you wanted to talk about that we didn't mention?
No. I mean, I encourage everyone to, if you want to come and see me do comedy, go to frisbees.news. And if you're interested in the financial stuff, The Flying Frisbee is my newsletter, and it's going great guns. It's done incredibly well, and we are very ambitious to grow it even further.
Fantastic. In terms of media picks, Tim, do you want to start with yours? What have you got for us?
Yeah, mine's one I credit my colleague Killian Connolly for introducing me to. It's a miniseries called The Offer, which I've just finished watching 10 episodes on. I think we came across it via Prime. It is the story of the making of The Godfather, which is widely considered to be one of the greatest, if not the greatest, films of the modern age.
Oh, fantastic.
And it's a 10-episode movie, or 10-episode series rather. Miles Teller plays Al Ruddy, who's the producer, and Matthew Good does a fantastic turn as who's the Robert Evans.
Oh yeah, the producer.
And I've never heard Robert Evans before, and it's a fantastic impression of someone who has quite a nasal way of speaking. Anyhow, it's just tremendous entertainment. Anyone who enjoys The Godfather will enjoy The Offer.
What a great pick.
Paramount.
Brilliant pick. Dominic.
I'm going to pick an audiobook series that I was recommended at a dinner in Prague by Larry Lepard and another guy whose name I've forgotten. But it's a series of audiobooks set in the mid-19th century in Texas about Texas Rangers. And it's by an author called Larry McMurtry, and it's called the Lonesome Dove series. And the first of those is Dead Man's Walk, and they're each about 25 hours long, or however, they're big books, and they are just great. The Lonesome Dove series, Dead Man's Walk by Larry McMurtry.
Brilliant stuff. Obviously, we're going to put links to everything as well as Dominic's book and Substack, etc. In the show notes. But mine's going to be I came across the Feynman lectures on YouTube. I think they've just started releasing them, or somebody has. And they're just like 20 minutes on a subject like the speed of light or gravity or something like that. And he's just so brilliant. It's just a reminder of how brilliant he is and how timeless what he's said and how interesting the subjects and the way he tackles them. It's just, I found it intoxicating. So I'm gonna share a link to those. Dominic, just to say thank you so much for coming on the pod. It's always so much fun, and it's all
before we tie things up. Do you want to allude to the Kisses on a Postcard?
Not just at the minute.
Do you want to get our audience warmed up for it?
What's happening?
Well, we raised some seed money, and we're in a development phase, and there's a lot of work going on behind the scenes, and we've made a lot of progress, but we've also hit a couple of walls. But this is a film it's going to be a film and a stage play, but first it's going to be a film, and it's all about the adventures of two evacuee boys evacuated from London to Cornwall in World War II, and it's a true story. And Tim is an investor, I'm delighted to say, and when we eventually get this over the line, it's going to blow people's minds. It's going to be better than The Godfather.
Amazing, absolutely amazing.
Generate more generational wealth and silver,
potentially.
Well, that sounds so exciting. Dominic, how do you got so much going on? It's just absolutely incredible.
You've been cloned, haven't you?
Yeah. Is this an AI Dominic Frisby that we're speaking to?
I work very hard.
Yes, indeed. Just a reminder before you go, give us the links to everything that your handles and all your work.
Theflyingfrisbee.com is my financial newsletter, very popular. And frisbees.news, frisbys.news is where you find all my comedy and my gigs.
And what about on X and places like that?
On X, I'm at Dominic Frisby, and just Dominic Frisby and whatever your social media is, you'll find me.
Brilliant stuff. Dominic, thank you so much once again for coming on the show. Best of luck with the book. I'm sure it's going to fly off the shelves, especially in America. And, look forward to having you back.
Cheers, folks. Thank you.
Cheers.
Thanks, Dominic.
Enjoy your weekend. Take care.
Will do. Cheers. Bye.
Bye. Thanks, everybody. This podcast is for entertainment purposes only. Please do your own research or contact a professional advisor.